Our special guest, Nischal Maheshwari, market expert, who joins us this morning, is able to put this into perspective for us. Mr. Maheshwari, what do you make of what you see on the charts this morning? Pretty much mixed signals and no visible trend line, at least to a novice like me.
So I think there is this amount of uncertainty basically in the markets because I think at least a week before, the U.S. market had more or less settled down as far as tariffs is concerned, and I think a couple of days back, the ruling which has come from a session court, I think that has rattled the market again. So there is uncertainty around that. And today, as you were saying, basically the GST Council meeting is there, so people are anticipating. So I think that is where the market is. So in sort of a anticipatory zone.
What are some of the market news anticipations that you are following right now? Because now we know that there is, at least for the time being, some clarity on tariffs that they're going to stay at 50%. There is some clarity on the GST reforms which are likely to be ratified by the GST Council today and tomorrow. So apart from these two big global as well as domestic events, is there something else specifically holding markets back right now?
So earnings is the issue basically. I think earnings is what market is not able to fathom basically how it's going to pan out. Earlier, we were all expecting that the second half of the year is going to be much better. But given these 50% tariffs, basically, I think now we have to see how this is going to impact. Though on the listed space, basically, you may not see much impact. But the second derivative of this fallout is going to impact the consumption. And consumption was supposed to be leading the second half resurgence. So that's why I think market is a bit jittery at this moment. People want to really see basically how this wedding season and the festive season plays out. And if the musings are good, basically, I think you will see market higher again.
Talking about the consumption story, I want to bring up some consumer durable stocks. In fact, the FMCG stocks, I beg your pardon, not consumer durable. And again, there seems to be a little bit of a confusion there this morning, Mr. Maheshwari, because the GST Council meet is likely to now ratify rates for all food items to be in the 5% tax bracket. But we are seeing pretty much all consumer food stocks like HUL, like Nestle, like Tata Consumers down in trade this morning. ITC, on the other hand, which is likely to attract a sin tax of 40% on its tobacco products, is up about 0.6%. So there seems to be some sort of a mismatch between what we are understanding by way of news and what we are seeing on the charts.
So I think all these stocks have already run up in anticipation. If you really look at it, most of these stocks are anywhere up from 5 to 10% from the time of 15th August when the Prime Minister made their announcement about GST. So I think it is already there. Now, how much of this tax cut is going to boost the consumption, especially of the FMCG goods? So you have to understand basically it's a finite thing. It cannot be you cannot consume, or you cannot do brushing twice a day or more 4 times a day. So you
Right.
have a finite demand. So that's why I think market is anticipating that it may not change the fortunes of this country or fortunes of this company dramatically.
Right. Of course, essentials cannot be. The price elasticity of demand on essentials is always expected to be low. Meanwhile, markets have recovered, Mr. Maheshwari. We are seeing now the charts have turned, the red has turned into green, almost flat though. But we have Sensex at least inching up almost 100 points or so from the day's low when markets open. So again, is this some sort of buy on dips that we are seeing? Market is ebbing down. Investors want to quickly stack up some stocks, and as soon as prices rise, they want to sell again. Is this sort of a profit booking and buy on dip strategy playing out in the markets as you see it?
So I think it is basically a trading market. So one has to be very, very nimble-footed in this kind of a market. If you do not have that kind of a bent of mind, basically you should stay away from the market for the time being. I think the best thing is to wait it out rather than actually get into the market in a hurry.
wait it out, not get into the market in a hurry. Meanwhile, I also want to discuss the IT sector with you. Now, we've seen this sort of divergence between what we see in the US and its knock-on effect on Indian IT stocks, especially the IT stocks on the Nifty 50. Of course, companies like Coforge, Persistent Systems have outperformed the Nifty 50 IT pack. But again, on a day when we saw the US markets take a massive beating, in fact, IT stocks like and the big tech stocks like Nvidia, Google, Apple, all of them taking a beating, we are seeing a mixed signal on Indian IT stocks. TCS is up about 0.4%, Infosys is down about 0.8%, and HCL Tech, Wipro, Tech Mahindra almost flat. So again, no real pattern that is visible as far as IT stocks are concerned. What's your view on this?
So I think IT is now forming the bottom somewhere. Basically, I think they are down almost 20% from the top. Plus, what you have to see is the rupee depreciation is going to help IT. Again, anticipation of an interest rate cut in the US in September is going to help IT and the demand in the US. So I think the IT is in a sort of a bottom formation kind of a zone. So on dips, one should be looking to add IT to the portfolio.
Add IT to your portfolio on dips. Which are the other sectors, Mr. Maheshwari, that you're bullish on when it comes to at least buying on dip as a strategy?
So I still continue to believe that consumption, basically both FMCG as well as on the FMEG, both the sides, one should continue to look at it. Auto is also a part of it. So I think consumption is another sector basically which one should continue to accumulate at lower levels.
Right, so FMCG as well as consumer durable seems to be one of the recommendations as far as sectors go, coming from Mr. Nischal Maheshwari this morning. I also want to talk to you in the context of tariffs and in the context of the fact that the pharma sector so far has been kept outside of the tariff, but tariffs as high as 200 to 50% are being spoken about by the US administration. So when it comes to pharma stocks, health stocks, how should investors tread right now?
So I think the broad consensus on pharma is that there will be no tariffs because US almost imports 90% of its generic drugs. And if you put a 200%, 100% kind of a tariff, basically, I think it is all going to get passed on. And it is ultimately going to increase the healthcare cost of the US system. So that's the thought process there. But then you cannot really predict what's going to happen. So I think similar to as far as other sectors are concerned, I think one should be cautious about it. But I'm more positive on pharma than the other export-oriented sectors.
All right, more positive on pharma, but hard to predict. Well, we will not hold you to a prediction. But Mr. Nischal Maheshwari, thank you so much for your time. As always, pleasure having you here on News9.
Thanks a lot.